Good evening, traders. Today is Wednesday, April 2nd. Oh, I'm sorry, the 12th. Off by 10 days. Well. CPI. The pump, the dump, the pump, then the dump. That's exactly how that played out, didn't it? So, wanted to call your attention to this pink line that I've drawn out. It goes all the way back to March 14th or so. See this trend line? I was tracking to this. I've been posting it on Twitter. We went way above the line and we're slowly going back to it, and tonight we've touched it right there. So, where to now, boys and girls? The pullback's coming. I'm going to show you tweets. We have lost momentum on the larger time frames, like the 4-hour, the 65-minute, the 4-hour time frames, and the 195-minute time frame, which is a half day. We have lost momentum. So, what was the moral of the story today? If you recall my episode last night, I called for the downtrend to begin because we have a negative cross on the 65-minute MACD. That ultimately is how it came to pass. And you will see tweets from me today where I'm questioning what was happening. I didn't trust it. I should have stuck to my guns. You'll see me question once again, as you have seen me question movement in previous episodes. You will see it again. And a big thing that I learned today was I'm sticking to my guns no matter what now. I don't care what happens. If the technicals say it's going down, that's what I'm doing. Okay? Because you'll see me tweet that I was like, man, this is a day like today. It's easy to second guess yourself. But come to find out, that's exactly what the market makers have planned, and today is proof positive. Proof positive. It did not matter one bit what CPI, what the number was, what the news was, what the FOMC minutes were. It didn't matter. Because I'm going to show you tweets that prove the timing of my tweets, prove the market makers were already going to take it down. It proves it because I sent out tweets before FOMC came out and what the market makers were going to do, because I'm going to show you once and for all. That's why the news doesn't matter. You saw a huge surge in CPI, didn't matter. Dump it. Because we're actually beginning a pullback. Okay? It's just this is not a down leg. No. Why? Because this CPI high is higher than April 4th high. Higher high. But in making a higher high, you will see me tweet about this. The market maker now has, air quotes, permission to go lower. To go lower. Now that you've made a higher high, you can now take it lower for a period of time, and then you're going to come right back up and go higher than this point eventually. Okay? Let's get into it. Intraday tweets. Actually, we're going to start off backwards again. We're going to start off at the end of the day. At the end of the day, because, you know, we already know what happened at the beginning of the day. We're going to go back to the beginning of the day also. What you're looking at here is the CPI surge, and there's the dump, there's the pump, there's the dump. Hey, we keep going down. Okay, so, okay, here we go. This was extended hours. This tweet right here, this is after the market closed. We're starting backwards. 5-minute extended hours. Rejection at SMA 20. See that? Here's the gray line, SMA 20, rejection at SMA 20. that means we're gonna go lower to the next day, guys. That's what that means. Okay. And okay, I tweeted earlier. You'll see that tweet later. I did tweet intraday right when it was right here, actually. Right here. This is the SMA 20 right here. I tweeted when it was right there. I said, I expect SMA 20 to reject. I was early. It didn't reject. It went up, then it went down, and now it's rejecting. So I was early. Today was a bull trap. It was a dump, a pump, a dump. Dump, pump, dump. Okay? I wonder if we gap down tomorrow, guys. I wonder. I think we just might. We shall see. We shall see. Oh, here's the 4-hour. Check it out, guys. Here's the 4-hour MACD. Look at this. Not only do you have a negative cross from way up here. Uh-oh, look at that. Look at that. That's nosedive formation, guys. Nosedive. That's a yikes. What does that mean? Nosedive back to the 0 line. We have lower to go, guys. We have lost momentum. We have lost it. It doesn't mean we're going to crash. I want to be clear. It just means we have lost momentum. We have been rallying for 3 weeks. It was a 45-degree angle rally up. Okay? So this is a pullback. It has started. I identified it yesterday when I said, you guys, we got a 65-minute negative cross. I think we're going down. So there you have it. We went down. Regardless, once again, I want to emphasize, regardless of what that CPI print did, regardless of what was in those FOMC minutes, we were going down. I said that last night. And now I saw this firsthand and I learned myself from these tweets. You'll see, I'm sticking to my guns now. If I see that 65-minute negative cross again, that's it. I don't care what economic data coming out the next day. GDP, I don't care what it is. I'm getting puts. Okay? Because not even CPI could reverse the negative cross. That's the bottom line. Not even a positive CPI could reverse a negative cross. Okay? That's why. Okay, oh, this is the tweet earlier, but I showed the, my first slide that I showed at the beginning of the episode. It's now touching the line. But I think tonight it's going to kind of bounce up. It's going to bounce up. You know, bounce, a reflexive bounce up, and then it's going to go through it. It's going to go through it, guys. Okay. So, yeah, something tells me we're going to touch that line. This was earlier. We're going to touch that line, and then some. Okay, so I'm going to leave it debatable amongst the community. I'm really agnostic to any of these levels down here. I don't have a strong opinion how far we're going to go down. Okay, this is the SPY 1 hour extended hours. Made a lower low. Okay, so here's the low. Here's a lower low. Extended hours made another low, and it just kept on going. Okay, it just kept on going. So when you have these lower lows, successive lower lows, you're going lower the next day. That's just the way it goes. Period. Full stop. Okay. And this is the 1 hour. Look at this. Wick down. Boop. Rejection from the 1 hour EMA. You guys know I love the 1 hour EMA. or the 65-minute EMA. In this case, this was Yahoo. I don't have a choice but to do the 1 hour. But where I have a choice on my trading platform, I prefer 65-minute, but it doesn't matter. Wick down all the same from the EMA 50 on the 1 hour. Okay. Yeah. Today was tough as hell. Easy to second guess yourself. But in the end, what does your gut tell you? What did my gut tell me from last night? Previously, I said something was off. Previously, I have said something's off. Something's off. I'm not buying it. I'm referring to this tweet that I sent intraday, right here. When it was right here. This move right here. I sent this tweet. I said, I'm not buying this. You are too far below the MACD zero line at the time. Yeah, at the time. You started from way down here. Here's the zero line up here. You started from way down here, up, 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 up. I'm like, no, 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 no. This is some kind of a pump. So I was tweeting it intraday. I'm like, I'm not buying this. Too far below the zero line to take back the EMA 50, which would have been, right here. But nonetheless, when hindsight is 2020, it kept on going up past the EMA 50. I'm like, what is this? I will look to short it when I see it wick down from under EMA 50. Well, of course, we know it never did go under. It just kept going up above it. Okay. Basically, this was the bull trap. This was the bull trap. Because we all know, oh, they'll take it down on FOMC minutes here. But you're going to see a tweet later where I called it exactly the moment I said, they're doing this intentionally. It was actually this moment right here. You'll see the tweet later. It was right here. I said they're doing this on purpose. Okay, 12.1 and 12.13. Here's 12.1. Here's 12.13. See the patterns? Doesn't it look higher highs, higher highs, higher highs, higher highs, dump. Okay, even on 12.1, it started to make lower lows here, right here. Well, technically, this is a lower low than that, obviously, right? So it started to show signs of fatigue. Okay, see what I mean? So once you make a higher high here, 12.1 to 12.13, once you make a higher high, you have permission to go lower. Because as we know, what happened in January? It took a while, but we did go way back up. Higher high, higher than the 12.13 high. See what I mean? That's exactly what will happen, guys. So don't start getting your hopes up that we're going to crash. It don't work that way. It doesn't work that way. We're going to go down first, and then we're going to go even higher. Okay? So, okay, right here. Yes, 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 right here. This tweet right here. I was talking about the final 30 minutes. Here. The final 30 minutes, you are straddling right through the half channel. Here's the here right here. You can't straddle this channel. You have to be either, well, for it to be bullish, only under the channel is bullish. You need to be under the channel to be bullish to go back up. If you straddle the channel, or if you're bouncing on top of the channel, you're going down. You're going down. That's just the way it is. That is a hard and fast rule. Because what happened? Straddle, 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 down. See? There you go. Okay, 195 minute. Ha ha ha. Look at that right here. Check it out. Oh no, that's not good. That's not good. 195 minute MACD. That is confirmed negative cross. Look at all these days. Okay? Well, not days. Yesterday was above, but a negative cross below. Came back up for CPI, but now look, and now it's not only a negative cross, it's separating. That's not good, guys. That is confirmed. Negative cross confirmed. Now the question is, how far down below the zero line does the 195 minute MACD stop? Right? How far? You're going down to that zero line now. You're going down there. Ain't nothing stopping you now. Question is, how far down? Okay? That's an open question. That's what is subject to debate amongst the trading community. Okay, it did make a higher high in pre-market CPI this morning right here. Right here. Equivalent to right here. It did make a higher high than 4.4. Oh yeah, I already showed this. It gives permission. Okay. This is the 1 hour MACD. I'm sorry, the 65 minute MACD right here. Let me show you this. Which one of these X's does it stop at? Well, we kind of know the answer because we've already let the benefit of hindsight play out tonight in extended hours. It's not the first X. It's the second X. I already saw it go past the first X. This first X is more aligned with this right here. Second X is more aligned with this right there. We have further down to go, guys. Okay. Yeah, debatable which X it hits. Well, now we know. And like G.I. Joe, knowing is half the battle. Okay, yeah. See, so since we're going backwards in time. Right here was when I said I'm holding my puts over to tomorrow. This is just the beginning of the downfall. Okay? Yep. Okay. Right. It was actually right here. Here we go. Not down here. Now we're right here. Remember, we're going backwards in time. Starting from the end, and now we're going up. It didn't quite pass this lower low yet, but I already called it in this tweet right here. See that's higher than that? I said, no. We'll be closing at new lows. The downtrend goes through tomorrow. All of those red flags that I tweeted earlier that you're going to see, all of those came before FOMC minutes at 2 p.m. The biggest red flag was last night, not even today. Last night, when I called out the 65-minute negative cross, I said, that's it. Negative cross. And last night I said, it is exceptionally difficult. It is exceptionally difficult to reverse a negative cross while above the zero line. Exceptionally difficult. And CPI proved that to be true. It tried to reverse it, dumped it. That's it. See what I mean? So let that be a lesson for next time. It doesn't matter what economic news is coming out the next day. If you have a negative cross, you got to short it. Short it. That's it. Okay? So, CPI and FOMC move down was already decided. And I'm going to show you that tweet in a little bit. Okay, why was I slow to get calls? I didn't get calls until, like right here, guys. I'll just spoil the... I didn't get calls until right here. Okay? And I got out of my calls right here. So, I got in here, I got out there. Because I was already suspecting something's not right. Okay? So since we're going back in time, I'm kind of like stealing my own thunder here. Why was I slow to get calls? And slow to get calls and the first to bail with a measly 1% gain. Because the 5-minute price straddled EMA 50. Let's check it out. Actually, I can yeah, let's just do that. Here are the red flags. See that there? See that there? That's straddling EMA 50. You guys, you existing listeners know that's a no-no. That's a no-no. I've always said that in previous episodes, and I'm saying it again. 65-minute. Did you know? In case you didn't know, since I always watch the 65-minute throughout the day, this straddled the 65-minute EMA 50. That's a no-no. Okay? That happens to coincide, let's see here. Oh, it would have been like, somewhere in this range. Something like that. It's strapped. That's a failure. That when I see these things, I'm like, I hesitate to get calls because you are violating my rules, my criteria. And once again, what happens? When you straddle the line, you fail. Okay, this is above and beyond the 65-minute negative cross that I called out last night. You see what I'm saying? It's showing weakness. It's showing hidden bearishness. This is what I call hidden bearishness. That's why I was slow. When I see these things, I'm like, I don't like that. I don't like that look. Even though I see it's going up, but I'm like, yeah, nah, I don't like this. I don't like this. Okay? So, this goes back to, you have to go with your gut. What does your criteria say? Regardless of whatever hype, whatever news is going on, what does your criteria say you must do? Okay? That's when you leave emotion out of it. Okay. Right here. Right there. Oh yeah, right here. Doop. I'm scaling more puts. I actually held puts from a lot earlier, but we're going backwards in time. Remember that. Okay. I got more puts right there. And in a tweet earlier that you saw earlier, I said, I'm holding my puts over, guys. I'm not selling my puts. Because what's happening? Oh, you're going down. Triple top. Triple top. Exactly. What was it? What was it again? 411.48. Yep, that's what it was. Yeah, you'll see another tweet. 1, 2, 3. Triple top exactly 411.48 3 times. 3 times. But let's check it out. That's a triple top. So that is a completely perfectly flush horizontal line. But guess what the MACD was doing? Nope. That's bearish divergence, guys. That's bearish divergence. That's horizontal. That's going down. And the 65-minute MACD never positive crossed. I'm watching that thing like a hawk. Okay? Yeah, plus no 65-minute positive cross. Triple top. Bearish divergence. Not bullish. See what I mean? You got to put the hype aside. You have to listen to your instincts, your intuition, your gut. If something is off, if something doesn't seem right, then go with it. You have to listen to your gut. I have done this so many times in so many episodes. I'm like, something's off, man. I'm out. I'm out. I don't care. I'm out. I'm bailing out. Okay, here we go. Yep. See, we're going backwards in time. So I'm stealing my own thunder. 411.48. 1, 2, 3. This is why I'm watching. I already bailed out. I already bailed out right here. Right? I'm like, something's not right. Something's off. Okay? See, I'm seeing all these little signs. I'm just watching. Okay. So now we're actually starting at the beginning. So just keep in mind, we left off basically right here. So here's the triple top here, here, and here, right? So here's where we just left off. Now we're starting at the beginning, and then we're going to go to the middle. Okay? So just get your bearings on. This is like the movie Memento. You guys seen that? So, anyways, upon closer inspection, that surge this morning up here did not touch the hive. Let me zoom in. There's the hive up there. It almost did, but it didn't. So there was not a rejection at the hive. So what that tells me is this actually happened back on 4-4 as well. Yes, 4-4. It didn't quite touch the hive on 4-4 either. I tweeted that out at the time. I was like, I thought it did, but when I looked closer, I'm like, no, it didn't touch it. So what that's telling me is it almost gets there, but it didn't actually reject at the hive. So that tells me it's opening the opportunity for it to come back. It's going to come back to it. Because if you get flat out rejected, well, that's obviously a no. No. Right? But you didn't quite touch it. So that's a hint, that's a clue that you're coming back at a later date to claim it. All right. So it found resistance at the black line. Yeah, right here. Oh, right here. Yep, right here. Right here. Okay. Remember, this is 8:10 in the morning. This is 20 minutes before opening bell, guys. This is Central Time. 20 minutes before opening bell. At some point this morning, watch for it to come back down and test EMA 50. So at the time, that would have been, I sent that tweet out right here. Watch for it to come back down and test EMA 50. Okay? Right here. Could keep it up there. Okay, it could, the price could be kept up there to raise the EMA 50 to go up. But as we know at opening bill, it went down. Okay? It went down to EMA 50. It didn't go up and raise EMA 50 to go up. Okay? That's what I mean there. So, let this be a suggestion that I have for you guys. This is why I don't front run CPI, GDP, whatever. I don't front run it anymore. Because in every instance, eventually, it's going to come down and backtest EMA 50 anyways, right here. You don't gain anything, guys. It's going to come back and backtest anyways. So this level is like right here. So what have you gained? Nothing. It's not worth front running, guys. I know it's easy to get into the hype. Oh, it's going to surge. No, actually, it's going to backtest anyways. So you risked a whole lot for just a little bit of gain. See that? Down, 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 down. Okay, so you gained this much. Okay, see, that's what I'm saying. It's not worth front running. If anything, depending on where you are in the MACD cycle, it's worth shorting, depending on where you are. In this case, when you have a negative cross on the 65-minute the night before, it's actually to your advantage to short, not to go long. Okay, it depends on where you are in the MACD cycle. All right, so that is my suggestion. Okay, here we go. Actually, I went long. Oops, I actually went long right there. This was the lesson that I learned for today. That from now on, I'm going with my gut. My gut all along, since last night, was to short it. So I basically kind of like, I guess I gave in to the hype. Okay, so I will not be doing that again, because you will see. Oh, did I say it? I did get out of my calls. I bailed on them as soon as I saw this big red candle. I'm like, okay. Okay, this is the same message that I said a moment ago. CPI or economic data surges pre-market. Always 100% backtest to the EMA 50. I learned this in January, so there's no value in getting calls ahead of time because it backtests to EMA 50 anyways. Every time, guys, without fail. And in this case, it backtested, and then it kept going. Oh boy. Okay, so we are back to a negative cross on the 65-minute. Oh yeah, okay, here we go. Yeah, so when these big red candles came down, this is now the 65-minute chart. See that? Negative cross. So CPI, positive cross, didn't matter. The overall trend was already going down, guys. This is a negative cross since last night, since last night's YouTube episode right here. The overall trend was down. So even a positive CPI could not buck the trend. See what I mean? So, yep, my hunch yesterday did win out. You gotta go with your gut. I'm remembering this. So when I got burned on that call, I said, no more. No more. Okay. Yeah, here's when I scaled out. Scaled out right there. So it took a hit on that one. But see, but that's the thing. Took a hit. I could have taken a bigger hit had I just hold on to it. Right? It's like, forget it. It's out. I'm out. But okay. Oh. Okay, no, yeah. I scaled out, but I got puts. Yeah, here we go. Here we go. Yeah, 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 yeah. So right here, scaled out and got puts. Okay, right there. I will scale more puts if it rejects here. Here meaning right there. This is the black channel line. Yeah, here's the black channel line right there. So I'm scaling more if it rejects. Obviously, it didn't reject. It just kept on going up. Okay. Okay. Well, I think this slides a little bit out of sequence because I already talked about the up move. Oh, okay. So yeah, as always, CPI didn't matter. Market maker was already deciding he's going to take it down. So here's what happened, guys. Market makers already decided CPI going to surge it up and they're going to rip it down. So this is the down move to conclude CPI. This up move was the bull trap for the FOMC. Okay, that's what it was. FOMC bull trap, down again. Okay, that's so this down move is for CPI. This down move is for FOMC. Okay, I mean, had FOMC not been today, oh man, that bad boy just would have went down and just stayed down. Okay, it wouldn't have been a dump, pump, dump. It just would have been a dump, and I think it would have kept on going down. Okay, so all right, okay, right here, right here. See that right here. At SMA 20, I do expect a rejection. This is a typical reflexive back test. The MACD is too far below the zero line. So yeah, at this moment, the MACD it's just too far below, guys. You're starting way too far. It's like you can't reasonably take back the EMA 50 from this far way down. So this was clearly just a squeeze, a pump for the FOMC. That's it, guys. That's why, I'm over here saying, oh yeah, I bet I'm gonna short it when I see it wick down from under EMA 50, right? Obviously, it never did because they were pumping it for FOMC minutes. Okay. Okay, right here, right here. See, I waited this whole move. I just sat and watched it. I'm like, what is going on here? Just like, no. As you saw in earlier tweets, I said, I'm not buying this. I'm not buying this. But I'm sitting there watching this. And I finally, yeah, here. Yeah, right here. Here. Finally, like right here. After like 2 hours, maybe. Something like that. I'm just watching it. I'm like, I was in astonishment. I'm like, what is going on here? Okay, but as you saw earlier in the tweets, I got in here and I got out there. Okay, I mean that's it. That's it. So, okay, all right. See this, guys, right here. I sent this tweet out here. That's equivalent to right here. In 15 minutes. So in three more candles. In the next 3 candles, a new 65-minute candle opens, and it will be a pivotal one. Ha ha ha. It will be a pivotal one. I already saw something is coming. So let's count 1, 2, 3. Right here. Right here. I talked about this earlier in the episode, but I'm going to call it out again. It was right here. Let's see if the next slide is it. Yes. In 2 minutes. It's 2 minutes until the next 65-minute candle starts. It's stalling right here in this spot intentionally. Right here. Right here. It's stalled right here. Do you want to know what I saw? This was the moment I realized exactly what the market makers were doing. And this was the moment I got out of my calls. I said, I'm out. I'm out. I'm out. Remember, I bought. Yeah, I bought right here, and I got out right there. So you ask, what did I see to make me say they are stalling right here intentionally? You want to know what I saw? I'm watching the 65-minute candle. In 2 minutes, the current 65-minute candle is going to close, a new one's going to open. Earlier, when it was up here in this range. Okay, so keep in mind, I sent this tweet out right here, this low point. Earlier, when it was up here, there was a positive cross on the 65-minute. But that candle hasn't closed yet. But there was a positive cross when it was up here. But with 2 minutes left to go, in this final 5-minute candle right here, they kept it down there. And when that 65-minute candle closed right there, what was a positive cross here, up here, has now been locked in. Because that candle is now closed. At this point, right here, that candle now closed in the lower position, and the MACD closed in the negative cross position. That's what I saw. This was straight up manipulation, guys, because I'm watching this thing down to the minute. I knew it. That's what I said. It's stalling right here intentionally. Because that locked in the 65-minute MACD in the negative cross position. Because they were going to take it down. That's what I saw. Okay? The jig is up. Now, with the new 65-minute, at this point, all these these candles going up right here, this is a new 65-minute. But that last 65-minute already locked in the MACD in the negative cross position. So this is now just playing around now. This is just typical market manipulation. See? So I'm watching this 411.48. This is 411.48. That's 411.48. That's 411.48. Triple top. And now we have arrived at that. Oh yeah, well, that's it. We have arrived at the middle. So I hope all that made sense today, guys. We are beginning the pullback. And so feel free to follow me on Twitter, where I'm giving real-time updates like I did today, trying to call out the market maker and his scheme, whatever they're up to. Don't forget to listen to your favorite music as you are trading. Helps you get into the right flow state. Please give this video a like, share, subscribe, or click to be notified when I release something new. With that, I'm Agent 000 signing off.